Okay. Good afternoon, everyone. I'm going to be opening the meeting this is our audit committee meeting, first one since 23. And the first business at hand is to choose someone to run this meeting.
I move you chair this meeting.
I second.
I guess that's done.
It's done.
Thank you. I will carry
That's
on.
2 out of 3.
Yeah. Not have the agenda in front of me. So I'm going to turn this over to Director Yeager.
So we need to do roll call real fast.
Thank you.
Will Summers,
Here.
Marilyn Smith,
Here.
Alex Johnson, second.
He's on his way.
On his way. And Jackie, you. Here. 3 out of 4 present.
Thank you. Next item on the agenda is
Isn't it
the approval of
the
minutes from last time.
Pardon?
Were we to approve the minutes from the last meeting?
That's on my
They were
list.
included
Thank you.
in the packet.
Yeah, sorry
I
about
move
that.
we approve the minutes.
I'll second that. I can do that. Council president gets a vote. So, and this is just another world here.
All in favor?
Aye.
Aye.
All opposed? Okay.
Now.
We don't have these meetings very often, obviously, so.
Good afternoon. I'm Brad Bingenheimer, partner with the accounting firm Singer Luwak, and we are the independent auditors for the city. And this meeting has been a long time coming because today we're reviewing the audited financial statements for the year ended June 30, 2022. So this is kind of like, a little bit of old information, but we do want to kind of, highlight it and then open up for any questions. So at June 30, well, first thing, we have issued our opinion on these financial statements. And our opinion is what we consider to be an unmodified opinion, which basically says that in our opinion, the financial statements do present fairly in all material respects, the financial position and results of operations for the city of Albany for the year ended June 30, 2022. So the city ended the year with total assets of $514 million, deferred outflows of $24 million, total liabilities of $169 million, and deferred inflows of $34 million. And the net of all those is a net position of $334 million at June 30, 2022. And that was an increase from the prior year of $18.5 million. So you had a positive increase in the net position of the city. And that is true in primarily the business type activities, which is the water, sewer, and stormwater systems, with about $500,000 increase in the governmental activities. In looking at the individual funds of the city, of course, the general fund is the most important fund. That's where almost, the vast majority of your activity happens. The general fund ended the year with a fund balance of $9 million, which was an increase, get there, which was an increase of $4.2 million. So it almost doubled. And that largely is because of some transfers in from other funds. In looking at your other funds, total fund balances for your governmental activities ended the year at with just under $80 million, which was an increase of $27 million. The largest increase was actually in the Albany Revitalization Fund due to additional debt issuance. There's $15 million of debt that was issued by the revitalization agency.
Pardon me, sir.
Yes.
Pardon me. Would you go back to the, I didn't quite catch, after we talked about the general fund, is this all other funds?
Well, inclusive of the general fund. So all your government funds. So that's the
Okay.
general fund, street fund, risk management, the grants fund, and the Albany Revitalization Agency, plus some additional funds, which are a bunch of smaller funds that kind of roll up into a single column. Just looking at those things are, the highlights, the important funds, the large funds of the city, essentially. And obviously R is a very important fund to the city. So it did issue, that $15 million of new debt. On a fund basis, that adds to the fund balance because that's amounts that then can be expended for R-related projects.
Question about the 4.2 million increase in general fund year to year. Was that, how much of a factor was the money that we received from, for COVID relief, ARPA and whatnot?
Well, so the general fund itself, if you look at, absent any transfers in, it had only a very small increase of about $60,000. There was transfers into the general fund of 4.6 million.
Okay.
And those came from a variety of funds, mainly those smaller non-major funds. And there's actually in the footnotes, if I can get there, I can give you the exact page that talks about that. Sorry, long footnotes. Let's see. Yes, transfers into the general fund is what brought the general fund fund balance up primarily. Let's see.
I apologize for my tardiness. Tomorrow is the biggest day of the year for my clients, so I got lost track of time.
I understand that. So yeah, when you look at it was mainly the non-major funds. Right, it's actually in the detail.
Do we have access to this document somewhere?
Gina?
This is the ACFR document that you are referring to,
Yes.
I believe. So it's out on the city's website. There's a link that you can go out on the finance page.
On the
So-
finance page,
Pardon me?
on the finance.
On the
page.
finance page, yeah, it'll say the fiscal year 22 ACFR.
Yes, it's a very long document. I mean, it's 170 pages long. It's a very long document, so I apologize. I'm having to scroll down to where I can see this. Okay. So yeah, the transfers out, or the transfers into the general fund primarily relates to amounts from the public safety levy, which does make sense because that's where you're levying the tax for that, but it's paying for police services, which are accounted for in the general fund.
Okay.
So that's where, so otherwise, absent that, then the general fund would have only had a very small increase. But because of that public safety levy, it's able to, pay fully for the, or it pays substantially for the police services. You're welcome. Okay. And then in addition to the governmental activities, you also operate, the 3 proprietary activities, which are the water, sewer, and street. Water, sewer, and stormwater. And the combined increase of those was $4 million in their net position. Once again, positive development there in terms of the financial health. So following the financial statements is a very long section on footnotes. I'm not going to go over those in great detail, other than I would like to highlight, one in particular. One of the things that really has a large impact on the financial statements of the city is the accounting for the Oregon PERS system. So the city participates in that. PERS operates as what they call a multi-employer cost sharing system, which basically means then PERS comes up with a single number for the system as a whole for the net pension liability. And then based upon projected future contributions to PERS, they allocate that to all the participating employers. So basically you have, the city's responsibility really is to make these contributions to PERS as required. The contribution rates are set every 2 years. So, the city's responsibility really is just that. So there's very little the city can do to impact this net pension liability that's have to be reported, but it does have very significant impact on your financial statements. So the city's share of that net pension liability is just shy of $40 million. Okay, and that's a big number. So if you didn't have that number in there, the net position of the city would be $40 million higher. It does have a huge impact. And as I said, you don't have a lot of ability to impact that number. There are things that can be done by issuing PERS bonds and that kind of thing that lower, your contribution rates. And that does have some positive impact. But I always tell people, if you're going to issue PERS bonds, you're basically betting that the interest rates on those bonds is lower than the amount that PERS can earn on that money. So it is kind of, an educated projection as to whether or not that's going to save the city money in the long run. As I said, the main thing is the city does have the responsibility of paying its annual contributions. Now, in the ACFR document, if you look at, there's a section called Required Supplementary Information. And in there, it does talk about, the contributions of the city. And of course, these are your contributions. To give you some idea, so for the fiscal year ended June 30, 2022, the city contributed just under $7.6 million to PERS. And that represents just about 25% of the covered compensation. So if your covered compensation for every dollar of payroll, about 25 cents is going to PERS in addition to that cost. If you look at there's a schedule in there of his 10-year historical information. In 2014, if you go back to there, the contributions were only 14% of your payroll. Today, they're 25. There's been a very significant increase over time in those contributions.
Hasn't it been projected that they're going to be higher, 27 to 30% in the near future?
I would not be surprised at that at all. as the retirees are, of course, living longer, collecting pensions longer, this projected future cash outflows it just keeps increasing. As well as you have more people retiring. So it's going to be a long time, Chris. And a lot of these people that are currently retirees are tier 1, tier 2 employees in PERS. So they're receiving very high benefits. Of course, the people that are no longer, under tier 1, tier 2, they're going to get lower benefits. So over time, it's going to, decrease, but it probably won't be in my lifetime. I mean, it's a long-term proposition before these rates come down. So it's going to continue to be a very significant burden on the finances of all municipalities in Oregon. I will say that I think Oregon is actually in better shape than a lot of states. A lot of states are less funded than Oregon is. So if there's any silver lining, that's it. So, and if you were actually to look at then that ACFR document, after that section on of required supplementary information, we have a section on budget to actual information for all the different funds, so you can see what how well this city did in terms of that.
Can you please note page numbers that you're on?
Oh, yeah.
Thank you.
So the budget to actual information, okay, that will start. I'm scrolling there right now. So that will start on page 91.
And the other one you mentioned, thanks for that, Counselor. The
That
less
required
rate-
supplementary information.
Yes.
Yeah, let me go back up there.
It's cat fur. What is that like a name for? Okay. Okay. Yeah.
Oh, the ACFR, sorry. ACFR stands for the Annual Comprehensive Financial Report. Correct. It's okay. So, and there's actually one of those reasons there. I mean, there's actually a good reason for it. So the acronym used to be CAFR, and it was pronounced CAFR. In some countries of the world, CAFR is a very derogatory term.
Yes.
And
South
they,
Africa. Yeah.
yes, they recognized that, and they said, we need to change it.
So now it's
ACFR.
Okay.
Yeah, so now we refer to it as the ACFR. Yeah, like I said, there's a very good reason for it. So yeah, those, let's see, those required
supplemental.
Yeah, that's on page, starts on page, no, that was the budget to actuals, 82.
Oh, there it is right here. Okay.
Oh, somebody bringing it up. I see it now on the screen here.
It's nice to have the visual instead of just hearing you say
Sure,
numbers at
yes,
us.
I understand that completely. So. As I said, there's a section on all the budget actuals. And then in addition to that, being part of an annual comprehensive financial report, there's also a very large section on statistics that gives like 10-year history on different things. The net position, the change in net position, the fund balances of governmental funds, just some historical information and some additional analysis on terms of like property tax collections, debt capacity, tax revenues, a variety of them. It's kind of an interesting, comparison, but nothing they really need to talk about. And actually the statistical information, we as auditors do not give an opinion on that because it's all this historical stuff that we may or may not have had any involvement with. So we don't give an opinion on that section. And the very last section of the report is what we call a compliance section. And that contains a couple different reports. Get there. The first report is our report under the requirements of the state of Oregon. So the state of Oregon requires us to look at your compliance with specific laws and regulations for the state of Oregon. And we report whether or not we find anything that indicates any non-compliance. Our tests did not indicate any non-compliance. And then the report very briefly introduces the concept of internal controls. So as part of every audit, one of the first things we do is we obtain an understanding of your internal controls. And we do that so that we understand where we may need to look at things a little bit more closely based upon the risk associated with it. We have good internal controls, lower risk, where controls are a little weaker, we higher risk. So we use this to tailor our audit. In addition, in our gaining of an understanding of the internal controls, if we identify anything that we believe should be brought to your attention, we separately will mention that. We'll mention it in a separate report here, as well as a letter to council. This very briefly introduces the concept of internal controls. The second report in the compliance section is our report under government auditing standards. So government auditing standards are issued by the US government and requires us to report on two things. The first thing, once again, talks about internal controls. And here we're supposed to say if we identified any internal control weaknesses that we believe are either significant deficiency or material weakness. Now, we did identify a couple in our report, and those are in an attached schedule of findings and responses. So the first one that we noted was regarding financial reporting and year-end gap adjustments. Obviously, we're here today in October of 24, talking about June 30, 22. So we know, this is one of those things, and we had lots of discussions with finance and city management about this. And as auditors, we didn't have everything we needed to perform an audit in a more timely manner. And so part of it had to do with just, the year-end closing and stuff. I've talked to council. I think the city was not well served by people who used to be here because they developed some very complex systems that could get the information out. The problem is they didn't document those systems. And nor did they train anybody on those systems. And so, the finance department kind of was left to try and figure it out on their own. And it took a long time. And so there was a lot of, it just took a lot more time than we typically would ever expect it to.
So question, sir, will we get a copy of that document at some point?
Yes, in fact,
On
it's
the
so
internet.
there is a summary of these findings in the ACFR itself.
I can download that.
You
and
can
read it.
download that yourself. There should have also been a separate communication.
I just handed that out to you. It has those material weaknesses in it.
Yeah. So, and, combine it also with shortage of staff. And this is a problem, not just with the city. There is a shortage of people with accounting skills
Everywhere.
with experience for government specifically. The Government Finance Officers Association, they recently had an article that talked about this. It is a nationwide problem. Governments cannot find people with skills and knowledge needed for finance positions. It is a real problem. So these people that you have them, they're commanding higher salaries to stay. So it is, this is a problem. I mean, and I don't have a solution to it, but that's also one of the factors is you have a limited number of people in your finance department, because in large part, you just can't find other people. So that's also one of the reasons for that, not the untimely reporting. And then the other one, which is I consider this one much less important. So the city received a significant amount of money from the American Recovery Plan, ARPA. And a lot of people got the initial accounting wrong because the city received a very large amount of money upfront. And you have until basically the end of this year to have all those funds obligated and fully expended by year end of 2026. Well, initially when everybody got this money, they immediately, so they have the money, they said, oh, we have revenue. Accounting rules say something slightly different. Accounting rules, because if you don't spend it, you have to return it. You don't really earn it. You don't really have revenue until you actually make the expenditures associated with it. So there was an initial mistiming there. And so there was a correction because it's a material amount. We have to say, well, there is some sort of weakness there. But that was very common. And the third one deals with a change in, well, I'm sorry, this dealt with loans receivable. And they were not quite being accounted for in accordance with GAAP, so we had another finding related to those. Those are not, I mean, to me, those are more technical. The last two are technical ones. And then the third one, the fourth finding deals with inventory valuation.
So can you give me material and significant?
Okay, so the difference between a material weakness and a significant deficiency is a material weakness is some condition where it's less than remote that a material misstatement won't get caught. That's the very technical term. Basically means there's a chance something could go wrong. There could be a misstatement that isn't detected on a timely basis by your own internal processes. A significant deficiency is something less than a material weakness that we as auditors believe should be communicated. So that's the criteria for it. And of course, given, once again, you had turnover in your finance department during this time period also. So it was like kind of like a perfect storm.
So those first three were the material weaknesses that you just went over, correct?
Let's see. Yes.
Yeah, okay, thank you.
And the last one was simply a significant deficiency.
And I have a question related to that. What's included in the broad category of inventory? Because inventory could include streets and pipes and rolling stock.
No.
And chairs.
Yeah, no, that's, the caption for those are capital assets.
Okay.
Inventory is truly, and this mainly deals with, inventory at Public Works. Where you actually have, materials on hand that can be used to fix things if they break. So that's the type of thing that we're talking about here.
Okay.
It's not the inventory of vehicles and that kind of thing.
Thank you.
That has to do with, like I said, those are captioned under capital assets.
These are
whereas
tools.
Yeah.
Tools. Okay.
Well,
Yeah.
tools typically aren't even separately really tracked other than for insurance purposes because they're too small for, financial statements that have, the many millions of dollars as we're dealing with, in the cities. Have to be a pretty significant tool.
Backhoes and whatnot.
Yes. Now that
Okay.
equipment and that kind of thing,
Okay.
that is tracked.
Got it.
Yes.
Thanks.
So I'm having a little trouble understanding why using replacement costs in their financial report to you instead of historical costs was incorrect. Because if they had to replace that piece, like they used something on the inventory, had to replace it, they have to replace it at current
Current
value.
cost, yes.
So that's why.
Because I don't write the rules, I just apply them. And the
Okay.
rules are you use historical cost.
Okay.
So, yeah, I don't write the rules, I just have to live by it.
Yeah, the
You would
rules is the
use
rules.
replacement cost, like if you were, for like insurance purposes, that would be a replacement cost. When you're doing accounting, you just want to account for the money that you paid for your supplies. So that otherwise it would get wonky. Because the valuation would fluctuate based on
Current market
yeah,
trends, yeah.
however long you kept the supplies. I don't know if that's helpful, but.
So that kind of is a rundown of the ACFR. And I'd be happy to try and answer any of the questions you may have.
Can I make a quick comment? So we had material weaknesses, which have to do with the reporting aspect of it, but it's not an indication that the city is in any way hiding money or doing anything poorly or anything like that. It's the reporting aspect of it.
Director, isn't this, when we're going through that changeover as well in units and all that?
Well, this was just, this was really, some of these were a result of the turnover of staff, especially that first one. The second one, that was actually me, I think. I think I reported ARPA funds as revenues instead of deferred revenues or unearned revenues. Because frankly, we're not used to getting money up front. We're used to getting it back on a reimbursement basis when it comes to grants. And
Right.
so this was just very different. And so when we got the money, it's like, oh, we got revenue. So, it was, again, there was nothing intentional behind any of these things. I think it's, it was just maybe some confusion, misunderstanding.
Yeah, I mean, really, as far as the ARPA money, as well as then the loans receivable, it's just accounting technicalities there rather than anything of any, consequence, other than just, because the accounting rules weren't followed, we had to propose an adjustment to have to be material.
So, so it sounds like our biggest, the most significant deficiency that we had was the fact that we didn't have our processes well documented. So what are we doing to mitigate that for the future so that if or when we have turnover again, we don't get in a situation where we're, several years behind on audits and looking at another audit finding?
We have been documenting the heck out of things. So we are documenting all of our processes. We're documenting everything, screenshots of where you go to find this information. The other thing that we're doing is we are getting some ACFR software that will help us do some of that work without having to we'll have information as part of that too, so that we can be more consistent in how we're getting our information and putting the information in there.
Yeah,
I figured. But I wanted you to say it.
I always say, if you're, if a city's going to draft their own ACFR, you really just take three things. One, people who know the rules, which you do have that. You do need a good system in place to do that. So something like this ACFR software will be a system. And the third one is people just need to have the time to do it. And that becomes the biggest problem many times because you're short-staffed. That people don't have the extra time to spend. I mean, putting this 200-page document together takes quite a bit of time.
It does. And when you're doing it manually, it's even, I mean, we had the auditors draft our 22 aquifer for us, put it in their software. We don't have that software. And so we were doing everything manually in Excel, having to convert it to PDF files, pulling everything together. And it was a very lengthy process. It was very prone to errors where you'd have to go back and correct it. So we're trying to leverage technology. Like we had the auditors draft our financials. We're going to have them draft our 23 financials also. It's a time savings for us. And then we can, move forward with developing better processes and documenting so that we can start doing that again.
I tell people a lot that this kind of financial this financial world is not the same thing as balancing your bank statement for your personal money. It's just not.
No.
And to try to, or even for a business, a regular business that only does one thing. We're a dozen businesses and it's very complicated. So I wish more people had the patience to understand that or try to.
Yeah. Yeah. In my position, I always tell, people that, when it comes to governmental financial reporting, it is much more complex than anything you'll see in the commercial, realm. Even if you get up to, even though the largest corporations, the financial statements for a large corporation might run 50 pages. The cities here is almost 200 pages. I mean, it's just, there's so much information and you have so many different, users of this information that want different information. So to bring everything together in a single document, it's very complex. I had one of my fellow partners in the firm that I was talking about, they're in the nonprofit realm, and they basically said, Gatsby's just crazy. So.
The people who pay us their utility bills and their property taxes expect that kind of detail and
Yes.
yeah, they expect accountability of accounting.
Yes. In this, once again, this is one of those issues that is coming to the forefront. Once again, the Government Finance Officers Association, they're in the most recent, monthly magazine, they had an article that talks specifically about, governmental financial reporting. And as they keep adding new requirements to it, they're basically asking, the question now of GASB, is the benefit for this additional information worth the cost? Because some of these have been very costly to implement. And so, at least there's that beginning to be that discussion out there. GASB, do we have enough information? Every time you add a new thing, it creates more cost.
How often do they ask, why do we need this information?
Well, if you were to ask the people at GASB, they do it all the time. But, I always view it, the people at GASB have a tendency to sit in an ivory tower and they try and, think about things. And of course, if you're talking, like the county of Los Angeles, California, it's a whole different world than the city of Albany, Oregon. But yet they write the rules for the county of Los Angeles, where it has it's larger than many governments around the world in a single county. So yeah, it is, it's difficult to get that balance, unfortunately. It's why large number of our clients no longer report under GAAP. They now report under some sort of a modified cash basis of accounting. Because they basically said for smaller cities than, smaller than Albany, it just is too costly. And they don't see the benefit to it. So that's also a trend that we're seeing out there, that more municipalities are deciding to not report under GAAP or report under some sort of alternative basis of accounting, which they can do under Oregon law. Not every state allows that. Many states require full gap financial statements regardless of your size.
That can be cost prohibitive.
Very quickly, yes.
Is any of the software that's out there starting to utilize AI to help?
We just signed the contract for the software, so we haven't had a chance to really get in and dig around in it. You know, we will leverage technology as long as it's safe. So we just want to make sure that whatever information we put in there isn't going to put the city at harm in some way. But yeah, we absolutely are looking into using, you know, all the technologies. So.
Thank you.
Yeah.
Does that complete your report?
Yes, unless you have any other questions for me.
Anyone else have questions?
When can we, so I can take a look at it tonight or this weekend?
It's on the website. Yeah. Yeah. Thank
So
you.
if you go to departments and finance.
Yeah, I wrote it
and
down, the
then- yeah,
pathway.
you can find it there. That's where I found it eventually.
Well, thank you for having me today. I do appreciate the opportunity to speak with you about this. So thank you.
So what's our
Thank you.
next step with this?
Generally, the person who is in charge will just report out at a council meeting during business from the
No.
council that the audit committee met and this is what was discussed. When it was Counselor Johnson, she would just, you know, give a couple little sentences, but whatever you want to convey is up to you.
I'll handle it.
Okay.
More eloquently than I
Thank you.
did today.
Having been involved in nonprofit business and,
Your mic.
Microphone.
oh, gotta talk into the mic. Okay. Having been involved in business, nonprofit, and now governmental budgets and seeing the material weaknesses they have reported here. You know, I thought it was very insightful to say a number of these material pieces are staffing issues. And when you can't find the people because they're not there, you'll have a material issue like a few of these. And, you know, I'm going to say that Gina's going, oh, money, revenue. That's, I could understand that. And, you know, that's something that's very, I would assume would be easily corrected. And so that the next time we go through an audit that will have been taken care of and we won't see it again. But, you know, these aren't bad. I mean, really.
They could have been a lot worse,
Oh, yeah.
but yeah.
Can I ask a companion question? Where are we with the audit for the most recent past fiscal year?
Well, we're working on fiscal year 23 right now. And once we get that one finalized and have final numbers, then we can start on 24.
Okay.
Thank you.
You're welcome.
Now, can you explain that to me in that 23 fiscal year ended when?
Ended June 30th, 2023.
Okay.
So we're about a year behind right now.
But, you know, okay, having been with the school district, you know, they have a year end and they don't know the numbers for another year, you know, because of what the state's supposed to put in and what the state didn't put in or would put in a little different manner. So there were so many different balls in the air. Does the city have that same problem?
Not usually. We usually shoot for 6 months after the end of the fiscal year. You know, as Brad mentioned, we just got really behind due to some staffing turnover and just trying to follow along with the work papers and going from there. We had about a 4 or 5 month gap. One person left, another person came in, and it was also during budget season. And so there was, a lot of focus on budget, trying to get that done too, because as you know, if we don't have a adopted budget in place by June 30, then we don't get to operate. So, it's when it's a toss up between those two things, we have to get a budget done so that we can operate. But we anticipate this moving forward, that we're going to get this caught up, and we're going to stay caught up.
So we just finished, so 2022 through 2023, we just finished that one.
We just finished fiscal year 2022's audit. We are about a year behind on fiscal year 23's audit.
Okay,
And then once we finish that and get the final numbers, we can move to 24.
okay. So how far along are we? 50%, 25%?
No, Kate, the finance manager has been working on it, and that's her focus right now, is just to get that audit done.
Okay. Thank you.
Mhm.
The memo in front of us about the transient room tax audit looks
our
very
next.
different than the piece of paper or the same memo I read in communications with the city talking about this meeting. There were, maybe these were, yeah. I'm
I
not sure if
believe
these were
that's
the
our
same.
next agenda item.
Pardon?
I believe
Our
that's our
next
next agenda
Oh,
item.
okay, never mind then. I'll wait till we get to that. Pardon me for rushing into things.
And that's where we are.
Okay,
Proceed.
thank you. Okay,
See,
so
agenda.
every year we audit 4 or 5 different hotels in the area to make sure that they are following the rules. One, that they have a certificate that says they're allowed to collect a tax on our behalf. Sometimes the hotels don't understand that they're collecting it on our behalf. During COVID, it was interesting because we had a hotel owner who said, well, I don't have money to pay my staff, so, I can't pay you. And it's like, well, you have to pay us because you're collecting this on our behalf. It's not money for you to spend. All of them, though, are the ones that we audited this year were neither over nor under, which is a little unusual. Sometimes we have small differences there. All the documentation, the backup documentation matched what they provided to us. We do have one hotel that consistently pays late, and they pay all the penalties and late fees that are associated with that. But they are up to date as of the September 27th.
Of 24.
Yeah, this is for 24. Yeah. And then, recent ownership change, and we had some initial concerns with some of the reporting on that. My accounting specialist walked them through it, how to do it, and things are on track now. So the most exciting piece, I think, of this entire memo is that the city has contracted with Granicus to collect our short-term rental transient lodging taxes. And we're hoping to go live with that in January. And we may end up moving the way we currently collect to that too. But at first, the emphasis is going to be on the short-term rentals.
Does that include Airbnb and?
It does.
Aha, finally,
Yes.
great.
And Will, I was also confused and just realized that the one that was in the memo you got is the part of the minutes from the 2022 meeting. So that's why the numbers are different than this one.
Okay.
Just
That
realized.
would.
Some of the-
was that. Okay. My confusion, I'm sorry, apologize.
Do you have any other questions about this? Okay.
Other questions, anyone?
I'm good.
Okay. I did finally get my agenda for me. Business from the members. Any comments, questions, announcements? Okay,
As somebody who has an accounting degree and took governmental accounting, I understand why it's hard to find government accountants. Because there's a reason why I didn't go there. So it was
So-
really complicated and I did not like it. So good luck. I hope there are people. I did have a good friend that was really excited about it and she went into governmental accounting. So I hope there's more people like her out there so we can get
So-
some government accountants.
So for me, somebody didn't know he didn't like numbers. I married my accountant, so.
And from the reading I've done, because I just can't leave it alone, accounting degrees throughout the country are fewer than we've seen in a long time, and it's been a trend downward. So we're seeing not only governmental accounting, but CPAs and all sectors of accounting are struggling with staffing because people aren't taking those things in college.
And I
Can I
don't,
say something
Sure.
on that? Yeah. Because I'm also involved with our Oregon State Board of Accountancy. The Board of Accountancy is doing some things to help hopefully make it easier for people to enter into this profession. For years, it has basically required a 5-year degree. They're going to change that. They're going to give you 3 different paths to obtain a CPA. So we're hoping that this is a nationwide problem. And so we're looking at, different ways to make it more attractive. And of course, one of the bottom line things is for new graduates, accounting may not be always the most attractive career path because starting salaries are not as great as they are in other technical fields. So bottom line, we're gonna have to pay people more to attract them into the profession. If we pay them more, it means the fees have to go up. I mean, that's just, so that's just gonna be something we see, and there again, also does put pressure on governments, it's already, these audits are already expensive.
Mhm.
And unfortunately, I'm telling people they're just gonna get more expensive in the future. Because there are a few people doing this work. Law of supply and demand still comes into play. If we're gonna have to work really, really hard, we want to get paid well for it.
and I think that's the other piece of it too. I think with, as regulations continue to grow and we have more and more GASB statements that we have to, so we're not enforce, but,
Implement.
thank you, implement. There's a lot of pressure on these positions and people don't necessarily want to do those. And so they don't want to stay in government or they, decide that they're going to move to a different position. And so, not only is it, we have to pay people more, we also have to hire more people. And those are people who are hard to find. So it's just kind of a, the cycle that just keeps going round and round.
Catch 22.
Yeah.
So one of the things that, like with when I worked at HP looking for technicians and for the fabs, we partnered with LBCC to create a program that would be a pipeline for us, right? And I hired a lot of people from that program when I worked at HP. Maybe that's something that the accountancy board could look at is, approaching a college about creating that pipeline that incentivizes these young folks to, or folks going back to school to get into accountancy.
They already are doing that. I mean, all the firms and the Board of Accountancy is very, proactive with the colleges and universities in the state to try and, garner additional interest in accounting careers. Unfortunately, it's not a very sexy career.
Yeah.
I mean, it's just, it's not that exciting. Of course, I always tell people, last thing you want is an excited auditor, because that means something really bad's happened. So, yeah.
Sounds like a good Halloween costume.
So, there's just some challenges, to it, but we're working hard to try and fix those. It's being addressed at a national level with the AICPA. So yeah, we're working on it, but it's not going to happen overnight. That's the big problem. This is a decades-long problem that we've got to solve. I heard one person say that, if you look over the last, approximately 5 years, every year nationwide, we've been losing about 300,000 CPAs to retirements and only bringing in another 100,000.
We're down 200,000 no matter what.
Yeah, so, and it's been shrinking over time. A lot of firms are not taking on new clients. Or if you are a new client, they basically are, the fees are double and triple what they were just 5 years ago. So. My wife is also a CPA with another firm, and they have the same problem. I don't have the answer right now. Working on it. So.
Thank you.
Thank you for letting me interject at the end.
It was valuable information. I appreciate you being here and telling us that. Everything costs more. And you need to pay for things to be done right. So I understand that part too. Is there any other business from the membership? Any
nothing.
announcements?
I want to add on to yours. That is, it's cheaper to pay to get things right than to have to clean up the mess afterwards.
That's right.
Fact.
Yep. Spread the word. It sticks anywhere. Anything further? Meeting adjourned. Thank
Thank
you.
you.
Thank you.